Hello everyone and welcome back to my YouTube channel Fractal Analytica. As promised, today we are back with the second part of the gold trade that you saw in the previous video. As you may remember, during the first part, we identified the first fractal with a very strong similarity. This allowed us to take a short trade, entering from the equal highs and targeting a take profit at the top of the red triangle you can see at the bottom of the chart. This trade was successful and generated 5R in profit. Today, we are going to look at what happened next, because as you probably noticed during the last trade, the indicator had already detected the beginning of the second fractal. As price continued to develop, the second fractal became clear. To avoid any confusion, we will call the previous one fractal 1, and now we will focus on the fractal 2, which I'm placing inside the rectangle, as usual, so we can clearly define and analyze it. Here, you will notice that I intentionally selected a slightly larger area than the one strictly limited by the indicator. This is because it contains more information, which helps refine this analysis. After this, we cut the fractal and we start to look for similarities. So, I refine the fractal again and keep only the part that truly interests us. As always, I put the fractal aside and begin comparing it to price action, focusing mainly on highs and lows. Now, this is very important. Here, I want to show you what not to do, or more precisely, how to avoid the mistake that could lead to losing trade. On fractal, I draw a trend line showing higher lows, which we clearly see in the fractal structure. Then, I identify another higher low. However, when I look at the real price, I notice the opposite behavior. This tells me immediately that this zone cannot be the correct one. So I look further, and this time I clearly find a higher low followed by another higher low, matching the fractal structure. I then redefine my zone, paste it inside a new box, and label it as small fractal and larger fractal, which represents the full area where we expect the trade to occur. Next, using the small fractal, I define my entry zone after highlighting additional similarities. At this stage, I'm expecting a very specific pattern, which I draw here in blue. As you can see, we get equal high, followed by a small retest. At this point, I simply let the price develop. And once the price breaks upward, I wait for it to come back and retest those two highs. If price comes back to retest these levels, that becomes my entry. My stop loss will be pasted just below the last higher low, because if the price breaks the low, my analysis is no longer valid. For the take profit, I will use Fibonacci lever. I first apply the Fibonacci on the original fractal wave to see how far the fractal can extend. As you can see, it reached the 2.0 Fibonacci level. I then apply the same Fibonacci projection to the current price movement. I identify the 2.0 level again and set it as my take profit. Now we simply let the price develop, and as you can see again, my stop loss is extremely tight. This is intentional, because if the price breaks the low, the setup is invalid anyway. This allows me to achieve a very high risk-reward ratio. The trade gets triggered and price moves like an arrow, without any meaningful pullback, exactly as the fractal projection suggested, and finally reached the take profit. This trade resulted in 10R risk-reward ratio. This is a perfect example showing that within a single wave, you can often find multiple fractals, each offering different entry points and different take profits, allowing you to fully capitalize on an entire move or an entire trend. If you are interested in working with this approach, we invite you to visit our website fractalanalytica.com and get your own fractal indicator copy and take your trading to the next level. Thank you for watching, and I will see you in the next one. Bye!